Hey everyone, Steve here from My Crypto World. Well, today we're going to have a look at where the market's going, and we're also going to discuss why the market crash, the recent market crash, doesn't even matter. Okay, so a quick look at the markets to begin with. Now, last week we were sitting at 1.13 trillion. Sorry, just adjust this microphone here. At that time I said I'm not too sure that the market will fall further. If it does fall further, it could drop down to 712 billion. What we're doing now is we're just on 872 billion, and if you have a look at this green resistance line on the screen in front of you, and I've got a bit of crap on my screen here just with my cycles, but if I just move some of these cycles out of the way, you'll see that we're sitting right along a major resistance line here at the moment. So that's positive news for us, for people who are in the market short term. It certainly really doesn't matter too much if you're in the market for the long term view. I'll just put my cycles back there. Now, in saying that, it doesn't mean there's not a lot of pain out there. There certainly is. If we have a look at some individual cryptos at the moment, though, you can see that although the market had declined quite rapidly over the last 7 days, that most cryptos, stocks as well, have actually bounced along and stayed above the resistance line that we spoke about last week. So while the big ones might have moved, your Ethereums and your Bitcoin, the others not so much. Bitcoin Cash we're looking at here at the moment, still sitting above its major support line at $121. Now Bitcoin is the one that moved the most, but you can see right here now that it's sitting nicely at 20,492. The previous floor, if you want to call it that, and ceiling back at the day, was $20,021.07, so $20,000 roughly. And when you go back and you have a look at the market and what it looked like back then, you can see that it's a very strong support level for Bitcoin. Back in December 17, the market came up, hit that peak and fell away from it, didn't really return there again until November 2020, when it staggered around that price and then broke through it finally, which at that time that was a ceiling. Now that's a floor or a resistance level for that stock in a positive way. So I feel like we've hit a major resistance level there, which is very good for us to talk about. Let's have a look at some others. Polkadot hasn't really moved, it's still bouncing along nicely along its resistance level. Ethereum. Now, I said last week I wasn't too sure that Ethereum would fall below the line it did. I think I said it should come down to about 1,400. It has broken past it. It just goes to show you that sometimes your analysis can be wrong. It doesn't matter how long you've been in the market for. Things sometimes don't go according to your plan. Actually, that's the truth more often than not. We're sitting at about $1,000 at the moment. We're actually at this level here where there was a sideways movement or probably a consolidation pattern happening back in January 2021. It may still fall further before it continues its rise up. If it does, that'll push the whole market cap down further, as would Bitcoin if it fell any further. But the little ones, the little altcoins, not a great deal has changed, to be honest with you. Holo, we spoke about that last week. It's still bouncing nicely across its resistance floor. Same with the IOTA. Chainlink, exactly the same. In fact, Chainlink's up a little bit. It's made a small double bottom there, which is nice to see. Matic hasn't really hit the low yet. So Matic is one that I would think that may continue to fall down to around about its low of 29 cents. But we'll have to see how that works and unfolds over the next couple of weeks. Harmony, sitting nicely again, another one right on its resistance level. There's no real resistance level there at the moment. What do we have is another consolidation pattern that happened in February 2021, and the stock is just moving nicely along that line at the moment. Shiba Inu, I mean, who knows? Solana, again, Solana is another one similar to Matic, where it hasn't quite hit the bottom yet. If there was if we're going simply and purely on resistance levels, it might have a little bit further to go at the moment. Currently at $30, $31 roughly, it may drop down to 20 to find that support and floor for the stock to start moving upwards from. Solana still moving nicely. T-Drop up. I don't know why T-Drop is up, but it's up around about 30%. I know that Theta had Theta and Sony had an NFT drop last night. I did put a bid in for one, but too many people were in there, and I didn't get mine. But I know a few friends have got their Sony NFT artwork, so which was good for them. So maybe T-Drop is becoming more popular because of things like that, but I'm not too sure if that was the sole reason why it's up 30%. T-Drop, certainly T-Drop and Bitcoin Cash are the two big ones at the moment. So is RSR actually. I didn't cover RSR, but it's up 13%. Theta, again, not sitting nicely along its resistance line. Even though the market dropped last week, it hasn't really affected Theta, hasn't affected T-Fuel, hasn't affected Wax. You can see Wax is just bouncing nicely along there. XRP. XRP's, yeah, it's moved a little bit, so that's what the resistance line we had. Let's blow that up a little bit so we can see that. So we had a resistance line here at 33 cents. It's actually broken through that now and hovering just below it. And we'll just go back in time and see. XRP may continue to... It's actually fallen below quite a number of resistance lines there, although it has found a floor, which was its floor way back in February, March 2019. So we'll see where that goes and how that unfolds over the next couple of weeks. And we'll just finish off on Zilliqa there. Again, another one, Zilliqa has just fallen through that previous resistance line. Well, actually, look, there is a resistance line there, but there's also a distribution pattern over here where the market sort of went sideways for a number of months. It may just find some support around that line there if we just pop that down slightly. If we go back in time and have a look, it's sitting actually, if we go further back, that is an actual resistance line back in the 11th of June 2020. That was once a peak and a ceiling that it couldn't break through. It tried it again in August 2020 and finally broke through in November 2020. And now it's sitting nicely along there. So look, again, it's as we said last week, there are a number of cryptos, alternate cryptos out there in the marketplace that seem to have found their floor and possibly their bottom. And it's really just waiting for the big players, your Ethereum and your Bitcoins, to sort of stabilize for the rest of the market to move up. When we have a look at the market in total, as I said before, we're really bouncing along this $871 billion mark, and that is a resistance line that was created way back in December 2020. Now, I think it's really important to understand how the crypto market is adopting in the world. Just to give you some positive news, and this is what my thumbnail suggests, is the market crash doesn't even matter depending on your frame of mind and your outlook on things. So let's go to the first chart here. This is the adoption rate of cryptocurrencies versus the internet. And you can see these two lines side by side. The dark blue line is the number of internet users, and the number of internet users are on the left-hand side here. So when the internet first started, there was maybe 500 million people using the internet after 8 years of it launching. And similarly, we've got in 2020, we've got about 8 years later, we've got around about probably just under 500 million, maybe that might be about 400 million users or adopters of Bitcoin technology and or alternate coins, however you want to look at that. And if that trajectory continues to follow, you can see where it might look or what it might look like by the year 2030 if it follows that same process on all that same angle. We've got another one here. Let me just blow this up a bit bigger. So up the top here, you've got a timeline of from 1990 to the year 2000, and what the total internet users look like back then. And when you overlay that with a chart from 2014 to 2024 of the total crypto users, you can see it's almost side by side. So what that means is, and just gives you maybe a bit of faith that even though the market has fallen quite dramatically, that the future of the market and the future of crypto, but not just crypto itself, but even the whole market, the property market at S&P 500, all that sort of stuff is very positive. Market crashes are a normal part of the cycle, and I've explained this time and time again on my channel. You have to remember back in 1907, we had the Great Panic Crash. It was probably one of the first big panic crashes other than the ones before that with the tulips and everything else. where the market declined by about 50%, and that market decline over 50% lasted 11 months. In 1929, we had the Great Depression that lasted for a lot longer, but again, the market dropped quite dramatically over the first few years of about 50%, where it finally finished, it had lost 90% of its value, and it took quite a while for the market to recover from that. In 1961, we had the Kennedy crash. That market dropped 22% over a 6-month period. In 1973, we had the gold standard crash. I guess there's a couple of names the 1973 one had. But that market dropped then by 44%. And it took about 21 months for that market to recover. And in 1987, remember, we had the first contemporary crash. It was really the first major global financial crisis. Computers were coming on board. They were doing a lot of trading for us, and it was a global effect that happened from that. The market dropped 23%. It was known as Black Monday. It took about 24 months or 2 years for that market to recover. Most of the people on this channel would probably, their first crash they'd remember would be maybe the dot-com crash of the year 2000, where the market slipped 25% and took quite a while to recover as well. In 2009, we had a recession that lasted 128 days. And of course, in 2020, we had a very brief, sharp market crash when COVID was announced. The market dropped 34% before it recovered, and that lasted for about 33 days. So market crashes happen over and over and over again. It's just a natural rhythm of the way the markets work, and I guess in a sense is an indication of our human psyche. If you go back and have a look at all the crashes that have happened in the market since, and you added them all up, market crashes average around about 16 months. Now, our market high is, let me just grab that for you. Our market high here was in November 2021, and we're now in June. So we've already lived through 7 months of the crash already, if we're going to average it out and say that average crash is around about 16 months. What the exciting thing is, though, is the average expansion after a crash is around about 100 months or 8 years. So every time there's a market pullback, there's always market expansion that happens after that. And remember what I said earlier, that not in this video but in other ones, millionaires aren't made in the market expansion process, and they're certainly not made in a market crash unless you're shorting the market, of course, but they're made in the in-between. So it's people who are adopting to crypto now, getting into crypto, whether it be Bitcoin and Ethereum, the layer 1 coins, or whether it's an alternative coin of some type, getting in now while the prices are cheap, and then holding on for dear life as the market starts to expand and go forward. So just keep that in the back of your head, that market crash, this is a normal process, and we are due for a good correction in a positive way over the next 8 years. 8 years may sound like a long time, but it absolutely flies. I'd like to also cover off with a news article which is from probably one of the most famous authors out there in the market when it comes to wealth generation, which is Rich Dad Poor Dad author, Robert Kiyosaki. And he says that Rich Dad author says exactly what I've just said: crashes are best times to get rich. The highly successful author of the Rich Dad Poor Dad series of personal finance books has pointed to Bitcoin's crash as an opportunity for investors, saying that crashes are the best times to get rich. In a tweet shared with over his 1.9 million followers on the micro-blogging platform Twitter, Kiyosaki suggested that Bitcoin crash was good news, or great news, and he is waiting for the Bitcoin to crash to 20,000 so he can up the truck when the bottom is in. In other words, he's going to load a bucket load of Bitcoin into his truck and drive off into the sunset. Commenting on the crash, Kiyosaki was calling Bitcoin open source people's money in April 2021 and saying that he loves Bitcoin back in 2021 as well. Initially suggested cans of tuna fish and baked beans are the best investments, as people cannot eat gold, silver or Bitcoin. It's amazing when you read these articles how many people actually believe. Robert's got a very funny sense of humour about him, but some people would take that as gospel, and that he really believes that. So obviously food is very important, but he certainly, I couldn't imagine him investing into tuna fish and baked beans. Anyway, Kiyosaki has notably been a Bitcoin bull for years, and has even revealed earlier this year he has invested in smart contract platform Solana. Notably, others remain bullish on the long term, with Bloomberg commodity strategist Mike McClone revealing earlier this month he believes Bitcoin will hit $100,000 by the year 2025. So there is a lot of FUD in the market at the moment. I had no doubt we needed a market correction. It's just a bugger when it does happen because nobody really wants it, but it's actually a healthy thing for the market to go through. So we'll see where it goes, and we'll absolutely see you next week in our next video, where we'll discuss other news articles of the week. Until then, I hope your week is good. Take care.